Welcome back, Alpha Hunters. So the stock we got on board for today is JP Chase at JPM, and we came up with a plan that was pretty good. We found some leap options that could potentially give us a reward of 321%. Now that's contingent on breaking the downtrend line, so definitely watch for the analysis to see how we kind of spot that. We found that we can bring in some cash flow on the wheel with an annualized return of about 76%. Bringing about 1.5% per week. So that would bring in some pretty good cash flow until it broke that downtrend. And then we'd be looking to do a leaps options position back to roughly the all-time highs up into the 170 area. So if you like the analysis, give the video a like. Now on with the show. Okay, so let's start on the process to get to that end result. So as you already know, we are going to be looking at JP Chase. The ticker symbol is JPM, and they are a major financial bank. They've been around for over 100 years, so they have some legacy to them. They've been through a lot of bull and bear markets, so they are not what you would expect to be like a growth stock. You know, they're probably going to be pretty safe play, even though their stock history, as you can see on the chart, from just the recent 6 months or so, they've had some volatility. They've had some declines in the stock price, which can be good for us. So we are just looking here at a daily chart, and yeah, we can see this very nice decline we got going on here. It seems to be pretty consistent over pretty much the past 6 to 7 months. So I'm going to go out to a weekly chart and see if we can identify. Okay, so we do have a very nice, actually, a resistance right here, and that's kind of where we pulled into. Let's see if I'm going to pull back a little bit farther and see if, okay, so we have a very nice support about right in through that area. You know, we got to a resistance here, we got to a resistance here in 19, and twice actually 19. We got to it in May of 19 and then July of 19. And then we got to it again, but we kind of got through it and kind of broke out. And then COVID happened. We come crashing back through it. And then after COVID, we bounced up to it. And then we got through it in 2020, November of 2020. And now we are just coming back and retesting into a long-term resistance support area. So I like that, actually. That definitely gives us some good amount of support to play with. And the cool thing about that support level is the next one under it is kind of where I have these two lines. I'll get rid of one of these. These are from a long time back. I'll just get rid of one of them. So even if it did break through roughly the 117 area, it would probably wind up coming down to the 104 area, and that's where there's another pretty good support area back where this was in a channel pretty much from 18 to late 2019. That's very interesting. So I'm going to go out to a monthly chart. So that's a weekly chart. Let me go to a monthly. Okay, and then the monthly is not really nothing all that relevant. So I would say we're in a pretty good area to potentially be buying the stock, or probably taking even some leaps out for 2024. I know JP Morgan will have some pretty decent options without even having to look at their option chain already. So I definitely dig this. This could be a really good contender just to be buying shares, or potentially even starting like something like the wheel strategy, because I wouldn't really be worried about losing capital like some of the high growth stocks we've seen absolutely get slaughtered over the past year and a half or so. This would not be one of the candidates that I would think that would happen to. I think this would be really good. Even if it did wind up breaking down the 117 area, I think the lowest it potentially would go would be 104 before it started bouncing again. I do like this actually a lot. Okay, so now let's figure out what option strategy might be good to do here. So I did mention potentially doing a leap option. I think one interesting note here is we do have an upper kind of a trend line down that we've definitely hit before, and we've had a hard time breaking this trend line. I think we'll probably do it the next time we probably get there. We might chop around down here. Maybe we break down a little bit. I think it might be okay to do the wheel type strategy on this, probably bring in some cash flow. And then whenever we do break this trend line I just put on here, I think that would be a good time to maybe do like some directional plays to the bullish side. Potentially go out, buy leaps as far out as you can, and just let it ride. I think that might be a pretty good play to go with. So let me switch over. Let's look at the option chain real quick. I want you to leave a stock in the comments below, and I'll come up with a trading plan. Okay, so we do have very nice 6 weeks out for weekly options, so that's great to see that. That gives us some flexibility, especially doing shorter term stuff. They do have leaps that go out to January 24, and they also do have leaps that go out to June of 23 and September of 23, but they also do have Jan 23. But that's starting to get kind of close now. It's only about 6 months away, 6-7 months away. So if you're going to go out a little bit farther out in time, I definitely would be skipping over these Jan 23s and going potentially for the June 23, September's, or the Jan 24s. So there's definitely some flexibility further out in time. So that is really pretty nice. So I think what would be a pretty solid strategy to do here is kind of just lay out some capital. I know kind of an expensive stock. It's currently priced around 118. So that means if you were to do something like the wheel, you'd have to be forking up about $12,000 roughly of capital. I get that's a little bit out of people's price range. I kind of understand that. So we'll look at this real quick and then potentially look for another game plan. I think it's probably going to be more to do with the leap side, but if you're going to do something like the wheel, I would definitely sell weekly options, probably right here at the money. I do like selling at the money. I've made another video about that and why I do like doing that, bring in most capital. I wouldn't be worried about the breakdown or losing my capital, like JP Morgan going to zero or something like that. I would think bringing in cash flow as much as possible until it started breaking up to the upside would be the play here, and then start to do a directional play. I would maybe get off the wheel strategy and do the directional play. Okay, and then I'll probably go out to like Jan 24 and potentially look to buy something like this 125 strike here for about, roughly $14. And the thing I like about doing that is that was at the 225 or the 125 strike price. So that is roughly right here. And I'll mark that as a trigger spot. And then that was 14 point above that. So it would need to get to roughly that point. And that would be your break even if you were to do the leaps out that far to January of 24, right? Because you're going to buy it by the 125 strike for roughly 14 points. So this would be the point in time in which your strike becomes in the money if the stock is above that. And then the break even for your option at expiration is this 139. The thing I like about this is once it breaks this downtrend and starts to go to the upside, I think you'll see JP Morgan probably start to pick up. A lot of investors, as interest rates have been picking up, that's going to be good for the banks, especially with the Fed funds rate being increased. That gives them more ability to lend and make money off of lending. So I do kind of like this, and it might not be one of those things that plays out over the course of maybe a month or two, but several months as JP Morgan starts to turn back up, could definitely work out in your favor. I do like this actually quite a bit. But until JP Morgan breaks this downtrend line, I would say doing something like the wheel just to bring in some cash flow and just wait until it breaks that downtrend line. I think that would be a really solid game plan. So I'll put that away for now. So let's go back and potentially look at the wheel. So I think if you're doing something like the wheel and maybe you're selling this 118 or 119 or wherever the stock is at, whichever strike price is closest, or maybe the one just below it, sell that one for the week. And then obviously you get assigned shares, just turn right around and sell the covered calls. And then just wait and just keep doing that until it breaks this downtrend line that it's been in for pretty much all of 2022, right? So you could be bringing in roughly $1.75 or $1.70 a week. And then, so if you're bringing in 175 a week, using up about, we'll say $12,000. So that'd be about a 1.5% rate of return a week. Okay, now $12,000, I want a little bit high. It wouldn't be quite that, but it's okay. To bring in 1.5% a week, if you analyze that, it's going to be, I mean, that's a roughly 76% annualized return. That's pretty solid. That's pretty solid. And you're doing this on a company that looks like it's pretty good. They're going to pay dividends, so if you do get assigned shares, you're at least going to get people to pick up the dividend. And the dividend that they do pay out is roughly, I think, $1. Yeah, it's $1 per share. So yeah, JP Morgan's sitting at a really solid spot right here to do some strategies on it. And this is one I think is pretty low risk. I do like doing the wheel here until it breaks that downtrend. And then once it breaks that downtrend and setting up and doing something like this move, I definitely think once it gets back going and turning bullish, I mean, what was the all-time high? I think it would probably start to make a run back into the 170 area, which would be like a no-brainer. I think it would be running back into that area within a year. If it breaks this downtrend, I think within a year it'd probably be getting back up to that 170 area. So that's why I think going out, giving yourself plenty of time would be most beneficial. So if you did wind up picking up a strategy like that, where you're picking up the 125 for January of 24, say probably around $14 or so, maybe a little bit over $14 per share. It'd be roughly $1,400. I don't think that'd be too much of a problem. If you needed to go a little bit cheaper, obviously you can go a little bit farther out. But I think giving yourself plenty of time to let this kind of work out, whenever it does break that line, would be in your best interest, honestly, giving yourself plenty of time, because the market might be kind of squirrely, especially here over the next 6, 9, 10 months, something like that. So I think giving yourself plenty of time for it to work out would be probably the best way to go. So if it did wind up breaking that trend line and you did get this option here for $14, you know, you can look to say, you know, 14, you know, you're going to times that by 100. So that would be roughly $1,400. So that would be $1,400 per contract, right? So if we need to then know how much we could potentially make if it got back, you know, potentially to the 170 area, you know, we can just take 170 and we'll minus the strike that we'll be buying, so 125. So we have 45 points then to the upside that we can make money on. So then we'll take 45 and we'll divide that by 14. And we could potentially triple our money on using like this leaps, where we could take our $1,400 investment, multiply it by that 3.21 number, and we get roughly $4,500 reward. So this is one that's very interesting that we could potentially look a little bit more longer term. And I do like looking really long, as long term as I can right now, because just the market being where we are, just real choppy. We're not really in a solid bullish direction. So the more time we can just give ourselves to see how things play out, the better. But I do think as stocks kind of start to break some of their downtrends, like JP Morgan's got a clear downtrend. I think as some of those stocks start to break their downtrend, start to go back to the bullish side, I think it'll start to be where we can look to start making money on the bullish side. So I do like this. I do like comboing actually JP Morgan currently with doing the wheel now, and then once it breaks that downtrend, then starting to go and do something a little bit more bullish, like a leaps, a little bit more longer term, and potentially getting a reward, you know, getting a reward of like 321%. So just to recap real quick, we were looking to do something like the wheel, or what I'd be looking to do is something like the wheel where you can bring in 1.5% a week. And for an annualized return, that'd be roughly 76% annualized. And then till it breaks that downtrend line of this downtrend, I wouldn't be looking to do this longer term leaps until it broke that downtrend. And then you can do the leaps, which looking to bring in 321% return based on a leaps back to the all-time high. So that's going out to January of 2024. We're going a little bit out of the money on a leaps strike price because their options are already kind of expensive. And if you got to go a little bit farther out, I would, but I wouldn't go extremely far out of the money. But I do like getting this 321% return on getting into a leaps after it breaks that downtrend. So that would be my game plan on JP Morgan Chase. Alrighty, take care, Alpha Hunters.